You can certainly do the business without it, but if you don't have access with it to it, it's sort of like having one hand tied behind your back, and it's dirt cheap. Also, another service I suggest if you're going to send out mailings, and I talked about that earlier, is Pat Live. Pat Live is a live answering service, and they are especially adept at dealing with callers for real estate investors. Also, on that tools page at CameronDirect.com, you'll find a link for Pat Live. And again, there too, if you mention that I sent you, they are currently waiving their setup fee. So those are a couple of really great resources for you, and they're just, baseline stuff that will help to make your life that much easier so you can stay focused on generating revenue. So we got to pull comps. We got to come up with the value. We can't make an offer until we know what the house is worth. And we also have to estimate repairs. Now, we talked about the bad, really bad, awful method, and I frankly think that there's really no better way to do it, and certainly no easier way to do it, and certainly no other way that I know of to do it without even seeing the property. And that's why I love that. Now we'll run the purchase formula. Here it is. It's 70 cents on the dollar minus repairs. Please write that down in your notes. 70 cents on the dollar minus repairs. The after repair value times 0.70 minus the repairs is going to come out to what we call the maximum allowable offer. Now, here's where you're going to be real smart in your marketplace by listening carefully to what I'm about to say. Your buyer, Ricky Rehabber, is going to want a good deal on this house. If you can sell this house somewhere at or about Mayo, that maximum allowable offer we just talked about, if you can sell it at that price and make a profit, you are going to kick butt as a wholesaler. You are going to turn vacant houses into big pots of gold. So let's take that Mayo, that maximum allowable offer, okay? It's 70 cents on the dollar minus repairs equals Mayo. And let's take another deduction for our profit of, I think a simple rule of thumb would be 5% of the after repair value. If the house has a $200,000 after repair value, that's 10 grand. If the house has a $500,000 after repair value, that's 25 grand. Deduct that from Mayo, and let that be the number at which you want to pay. So now you can turn around and sell it at Mayo, which is a much higher figure, and make a very tidy profit. Now, will your buyers occasionally, if not often, be willing to pay more than Mayo? Yes, absolutely. Is that okay? Well, certainly it is. Anytime our buyer is willing to pay more than we expect, that's a wonderful thing. The point is, if you want to be successful as a wholesaler, if you want to turn vacant houses into gold, you need to leave enough on the table for the next guy so that he or she is getting a killer deal, and then you won't ever have trouble selling houses. In fact, you'll only need 2 or 3 of those types of buyers. They'll be lined up fighting over your deals. They'll be saying, no, but tell me about them first, because they know that you understand how to leave enough on the table for them. And so that may be the essence of how to be successful at this. Buy at a price that allows you to sell at a price that represents a killer deal to your buyer and that lets you make a tidy profit, and you will always sell them very, very quickly. Okay, so now we're going to make an all-cash offer to our seller, meaning there's no mortgage contingency, and there's no appraisal contingency, and there's no termite inspection or building inspection or any of that. Let's make a nice, clean, all-cash offer on a purchase and sale agreement. That's what that on your screen there, PSA, is purchase and sale agreement. The purchase and sale agreement can be, one that you use locally, one that your realtors use locally, but whichever one you decide to use, make sure that it is one that has been at least looked at by a local professional, preferably a real estate attorney. I have at CameronDirect.com a very, very inexpensive course called the Purchase and Sale Agreement Line by Line, Buying and Selling Junkers. You'll find that at CameronDirect.com under the Courses and Bootcamp page, and then you just look under my name there. And what that system does, it's on 2 CDs, is it's just a little over a 2-hour explanation of the Purchase and Sale Agreement line by line, where I picked it apart piece by piece and explained it in great detail, giving you examples of why this is in the agreement and how it affects you when you buy and how it affects you when you sell. And actually, there's some really funny stuff in there, some very, very humorous examples of what's in there and why. And stories of things that I've done or not done in the past that were, that are funny now, if you know what I mean. Very inexpensive course, and also it includes an example of a purchase and sale agreement, and it's actually the one that I'm going through, so that you can take that and use it if you like. Again, of course, we do recommend you have a local person look at it. So we're going to make an all-cash offer. Now you might say, hold on a minute there. I'm making an all-cash offer. I haven't got the cash to buy this house. Don't worry, you don't need it. All you need is earnest money, and the smallest earnest money deposit possible. Now the great news is that when we're doing this particular strategy, we're working with individual sellers in most cases, unlike bank or institutional sellers. And individual sellers are usually not hung up on earnest money deposits, and that's where $10 to $100 is more than enough to make it legitimate. Now, what I have found is some sellers will say, "No, don't worry about it. I don't need you to give me a deposit," and you do. You need to give them a small deposit in order to make that purchase and sale agreement binding and legitimate. And frankly, binding is important. You do need to give them a deposit. So, even though they might say, "No, I trust you, it's okay," you say, "No, listen, in order to make this legit, in order to make this official, in order to make this, correct, I do need to give you this small deposit," and so make sure they get it. You want to set your closing date 30 days, 45, 60 days out. Give yourself some time. With an institutional seller like a bank, you'd be hard pressed to get a deal where you're asking for more than 30 days to close. But with an individual seller, which is the type of seller we're talking about here, you're going to easily be able to get 45 or 60 days, and you might want to ask for it, because then for sure you'll have the time you need to find your buyer and get it closed. Now, at this point, you'd also want to get the title checked. Once you have the assigned purchase and sale agreement from your seller, you want to turn it in to your title company or your attorney who's going to handle the closing, and let them open escrow or open a file. And part of that process is to do a preliminary title check. And then I'd like you to get the results of that preliminary title check in writing. So it'll probably say, well, based on a preliminary title check dated today, we have found that the title for the property at 123 Elm Street is clear and marketable. And that's what you want, clear and marketable. Get that in writing. You'll be glad you did. Okay, step 4 is to sell quickly to the investor rehabber. We'll come back to getting that in writing in a second here. First thing we have to do is build our buyer's list. How are we going to do that? Well, the best way I know is to run an ad in the newspaper under the column of real estate for sale. You may also want to simultaneously run the ad under the column of business opportunity. And if you're running the same ad simultaneously in your newspaper under 2 different columns, your paper should give you a deal on that and only charge you 1.5 times the normal rate, as opposed to 2 times the normal rate. If you run that ad under real estate for sale, you might another secondary place to put it would be under real estate wanted. Your investors are looking there. They like to size up their competition. Put the ad where a rehabber will see it. And what you may want to do is experiment with it a little bit, test it, and see where you get the best results. A good ad would be, an example would be handyman special cheap cash. That's a good example of an ad that would draw rehabbers out of the woodwork. I've used that ad for years and it works great. Now, don't get all wigged out about building a buyer's list, because the reality is you really only need maybe 2, 3 at the most good rehabber buyers in your marketplace, and you can sell as many of these houses as you can get your hands on. Now, if you're going to get real high volume, you're going to be doing 5, 8, 10 of these a month, well, then you might need a few more. But to get going, you really only need 1 or 2 good rehabbers. Now, when you run that ad, if it's run correctly, you should end up with 30, 50, 100, 200 calls. And so you want to pre-screen your buyers and make sure that they can close quickly. See, the key to this all working out is for your buyer to be able to close before your purchase and sale agreement or your contract expires. So if we set a closing date of 60 days from the date of acceptance, your buyer needs to be able to come up with the cash and close on this thing before that window, that 60-day window of opportunity closes. Otherwise, your agreement with your seller expires. Now, that's not the end of the world. If that should happen, all you need to do is ask for an extension. An extension.